Hello, everyone, and welcome to this quick demonstration for the Geeks of Finance. I'm Michael Higgins, and I'm known as the Head Geek, and this is Demo Video 2. These demos will be a progression from Video 1 to Video 4, and are designed to show you how our course moves from the very basic to a more advanced understanding of your business. In each of the demos, you will have an opportunity to experience just a few minutes of our multi-hour program. The demo nuggets are designed to give you a taste of the incredible knowledge that you'll find when you take this course. And remember, this is only one small bite of our delicious 5-scoop ice cream cone. The second video will give you a feel for how we teach more advanced concepts to help you use the numbers at your company and make better decisions for the health of your business. I can't wait for you to see it.
And then finally, let's talk about how our inventory, accounts payable, and accounts receivable involved in cash flow. And first, let's talk about the two asset accounts, current asset accounts, and that is inventory and accounts receivable. And first, let's actually talk about accounts receivable first because it comes first in the sequence. And accounts receivable is essentially, to put it this way, is money, our cash that is essentially trapped over in our customer's bank account. It's terms that we've given our customers and 15 or 30 or 45 days. And so for that period of time, even though we've already performed a service for the customers and we might have even had to pay for materials or pay for help from vendors or, paid our employees to do the work, even though we might have had to put out money, we haven't received necessarily the money from our customers that we need to. And so accounts receivable is a record of our money that's sort of stuck in our customer's bank account. And just as a hint to all of you, and this is sometimes a small business, it's easy to forget that this is true, and that is it's good to give your customers terms because it makes it easier for them to do business. But when that money is due at 15 or 30 or 45 days or whatever it is, it's due, and you get to say, I want my money and I need to have my money. You get to collect that money right when it's due. Now, inventory, the other current asset account involved in cash flow or involved in cash flow in a big way, is money that, of course, that we have invested in the stuff that we use to produce our product. And the thing about inventory is, to the extent that we can do it, we want it to be just in time. We want to just have just the right amount of inventory so that we can fulfill our customers' orders without any delay, but we don't want to have any extra inventory or as little extra as possible. And we also want to be careful not to overbuy inventory, because essentially this isn't really the supplies or the stuff that we're using to fulfill orders. Think of it instead as big bags of cash sitting out in the warehouse or sitting out in the yard or even sitting in the office in supplies, to get stolen or run over by a forklift truck or burn in the sun or whatever it is. So we want to make sure that we can fulfill our orders expediently. We don't want to get stuck with inventory we can't use. So inventory is another place that our cash gets stuck, on the balance sheet. And then finally, let's talk about accounts payable. And accounts payable is the other side of the coin, and that is our vendors' money sitting in our bank account. And of course, what we want to do is we want to collect our accounts receivable as fast and expediently as we can. We want to use and invest in as little inventory as we can so that we're efficiently using it. And then we want to stretch out our accounts payable for as long as we reasonably can. And the only caveat here, just as there were caveats with inventory and accounts receivable, is we don't want to extend the payments to our vendors so much that they don't want to do business with us, or that it hurts the partnership between us and the vendors. Okay, well, that's a quick summary of the statement of cash flows, or the cash statement, and we will visit cash flow and the cash statement again when we do, if you work with us in Fundamental Geek segments 1, 2, and 3.
I'm sure you enjoyed that brief experience. Please take a look at our other demo videos and visit us at thegeeksoffinance.com. Feel free to surf around and even sign up for our Institute of Higher Earning. Thanks a lot.